Hi guys, welcome and welcome back to my channel. I'm so sorry, I know I've been away for a minute, but our girl had deliverables. So yeah, okay. So today I want us to talk about investments. I remember when we talked about budgeting, we said that the most important thing to do is to pay yourself first. Okay? And by paying yourself first is where you either set aside money for investments or for savings for a rainy day. Whatever you choose to do with your savings, that's up to you. But for investments, today I want us to talk about the different kinds of investments that you can take based off the capital that you have and also your risk appetite. Okay. So now, when we talk of investments, the kinds of investments that you're likely to take will be determined by two things. One, the capital that you have access to, and two, your risk appetite. Okay. So, when you look at this quadrant here, where you are really just determines where you the kinds of investments that you're likely to take. For example, if you have low capital or you do not have a big access to money right now, that means you're not willing to lose that money, correct? So the kinds of investments that you're going to take are also low risk investments. Okay? So this is just suitable, for example, if you're a student, because there is no right time to start. The right time to start is now if you did not already start yesterday. Okay? So you need to ensure that the kinds of investments that you're taking are the kinds of investments that are going to safeguard your capital. Okay? We also have the category of people who they have low capital, but they are not afraid of taking risks. If you remember the video where we talked about money personalities, I'm going to pin it right here so that you can refer to it if you didn't already watch it. You will know that there are people who will never let anything come between them and their bag, right? So they may have low capital, but they're not afraid of losing it because, I mean, the higher the risk, the higher the return, okay? So this category of people, we also have their kinds of investments that are suitable for them, and we're gonna talk about that as well. Then we also have people who have high capital but low risk. They are not willing to lose their money, so they are likely just want to invest in the low risk kinds of investments. Okay, there are also investment strategies or channels that are suitable for them. And finally, we have those people who have high capital. That also means that they are ready and willing to take risks. They're not afraid of that. And so we're also going to look at that. But for this particular session, I just want us to look at the first half of this quadrant, Let us look at the people who have low capital but have a high risk appetite or a low risk appetite and look at the kinds of investments that they are willing to take or the kinds of investments that would be advisable for each of those categories. All right. So, welcome. Class is in session. Um, I think the most talked about kind of investment right now, everywhere on social media or on any platform, is a money market. Let me assume you've not heard about a money market. So basically, a money market is a fund that will allow you to easily access your money, but it also shields you against inflation. In my opinion, a money market is really not an investment. Okay, it just helps you or shields you against inflation because most of the money that you invest in money markets, most of it is just usually invested in treasury bills for the government. Okay, the beauty of a money market is that you can start from as low as 100 bob. So there is absolutely no excuse for you to say that you have very little money and so you do not have a way or a means of where to invest your money. There are apps that allow you to invest as little as 100 bob. Like we said, the beauty of a money market is that it preserves your capital. It shields you against inflation so that even as the shilling is losing its value, then you're still going to have your money intact as at the end of the day. All right. These money markets are highly, highly liquid. If you want your money, you can access it in 3 to 5 days, but five is even a stretch. You're usually able to access your money in 1 to 3 days. Okay, the interest here ranges between 9 to 12%. Though in the recent past, it has been going really, really down. So that's why we want to look at other ways that you can invest your money. If, for example, you feel like I've been in the money market is no longer working for me. So what then? How else or what other avenues do you have? Okay. The other avenue that you can use if you do not have a lot of money, but you want a low risk investment, is investing in treasury bills. So, for the government of any country to be able to run its affairs, it needs money. And how do governments raise money? One is through taxation, which we all are aware of, okay? And two is through borrowing. So, one, they can either borrow externally, that is from institutions such as the World Bank, or they can borrow from its population. When it borrows from its population, it can either do that through treasury bills, which are more short form, or bonds, which are more long term. So, when a treasury bill is issued by the government, the minimum investment that you can make right now is 100,000. Okay, so it's a little on the higher side, but I've met people who tell you, hey, I have like 100,000 bob, I don't know what to do. So as you're probably thinking of a business that you want to start, don't let that money just lie around. It can also work for you. It can give you a little bit of interest as you do your business research, to decide where exactly you want to start investing in. Okay, so treasury bills is technically you lending money to the government. There is usually no risk in these kinds of investments. Why? Ever since we got independence in 1963, the government has never defaulted on any of its debts. And I'm talking about Kenya because I'm in Kenya right now. So if you want to invest, you can be sure you're not going to lose your money. Maybe it will start now, but that's very highly unlikely. So do not shy away from investing in treasury bills, okay? You can lock in your money for whatever period of time. If you need your money real quick, you can use the 91-day bills or 182-day bills or 364-day bills, like I said. So for these ones, you see, if you have money and you do not want to go through a third party like the money market, then you can go directly to the treasury bills. But if you're starting off, then do not shy away, because either way, if you invest in a money market, your money is going to be invested in the treasury bills. All right. Great. And let's move to the fixed deposit. Well, disclaimer, I do not highly recommend these ones. Why? Because they give you really, really low interest, because you see the rates is between 6 to 10%, and more often than not is 6, 7% or lower. What I do not recommend, if the rate of inflation, for example, is 5%, right? And they're giving you 6%, you see, really, you're just preserving your capital. So forgive me for saying this, but I feel like this is a lazy person's approach. But it is okay, because I mean, at the end of the day, you're not losing your money. The only problem is, if in the event you want to withdraw from a fixed deposit account, for example, you might end up losing all or some of your interest. You see, so it really just beats logic of why were you investing in this thing, for example. But this is if and only if you need to access your money before the locking period is over. Okay. The final category that I would recommend in this kind of category where you have low capital and want low risk is the SACCOs. The minimum investment for a SACCO will really just depend on the kind of SACCO that you want to get into. And the beauty of a SACCO is that it will pay you dividends, which mostly ranges between 6 and 12%. And it also pays you rebates of somewhere between 15 and 20%. So you see, this is a great strategy. And when I talk about investment, I'm not talking about where you put your money in a deposit account. This is where you like buy shares in a particular SACCO. They are usually relatively safe, until the recent past there were largely no issues. So you just need to ensure that the SACCO that you're investing in, first of all, is regulated by SASRA. It sends you regular reports. And also, the other beauty of being in a SACCO is it does not only grow your investment, but it also gives you access to credit. I have seen instances where, for example, if you save like 100,000, you can get a loan of between 300 and 500,000. So if maybe you're saving for a business, for example, you want to start your business in like a year's time, and remember we said don't take loans for enjoyment. Take a loan for an investment. And you see, a business is an investment which may give you a return. So this is really a good strategy that you can take in when you're investing, if you have like a business goal in mind. Okay, great. Then let's move to the next category of people. These are people who are not afraid of risks. Okay, these are people who nothing will come between them and their bag, which is a good strategy, because I mean, the higher the risk, the higher the return. Okay, so some of the investment strategies that you can take here is one. Let me start with the equity funds. So remember, we've said when you invest your money in a money market fund, in most instances, it is invested in treasury bills. Okay. So in an equity fund, your money is invested in stocks or shares of a company. So if you don't want to like go through all the hassle of analyzing the financial statements of a company, to determine which shares you should buy and which ones you should not buy, you can easily just go through the equity funds route. Okay. So this is where you get to a fund manager, invest your money, and then your money will be invested in the stocks and shares of a company. The only problem with this, not a problem, the only downside is it is really really high risk because you could, for example, purchase shares today for like 100 bob, and then tomorrow or 1 month down the line, the shares have decreased in value. They're going for like 70 bob, and I'm sure when you see this now, you start panicking. So these ones are really for people who are not afraid of risks. And then, if you actually want to get a decent return from such kind of an investment, make sure you go for it in the long term. Because in the short term, the market is really volatile. Not the currency, your investment is really likely to fluctuate. So make sure if you're getting into such kind of an investment, you're going into it for the long term. All right. You see, even if it is high risk, the interest is actually high because you can get anywhere between 13 to 20%, of investment, which is something good. The liquidity is medium. It's not like you can access it in 1 or 2 days if you want to. But the minimum investment is 1,000 bob, depending again on the fund manager. You're probably there wondering who are these fund managers that you're talking about. These are all those insurance companies, the likes of Sanlam, Britam, ICA, CIC. Again, this is not a paid ad, so I'm just like taking you to the river. You go do your research, see which one is performing best if you're interested in such kinds of things, and invest where you think you're gonna get a high return. The other category is a balance fund. So again, remember, money market, most of it, your money is invested in treasury bills, okay? Equity funds, it is invested in the stocks and shares of companies. But now, when you come to balance funds, it's called balanced because it balances. So your money, part of it is going to be invested in equity, the other part is going to be invested in fixed income. This is like something like a treasury bill, or a bond. So you see, in this case, it is moderately risky because assuming the equities are not performing really well, then the fixed income can help shield you against, the inflation or the movement that is taking place in the equity. Again, for these ones, you can access funds within 3 to 5 days, so it is moderately liquid. I mean, it's just like a money market fund. It is overseen by the CMA, so chances of you losing your money are not very high, but there's no guarantee on your capital. Okay, remember these are risky investments, but again, the minimum investment is somewhere between 1,000 and 5,000 bob. And I know for some of you, 5,000 bob is money you use for enjoyment on one weekend, so you might as well, just try out something like a balance fund. So similarly, all those funds, like the insurance companies that I mentioned, will offer you this. Okay. And last but not least, for people who have a high risk appetite, is REITs. So the same way, if you buy shares of a company, it's like you're buying ownership of that company. When you buy REITs, it's like you're getting your own little slice of real estate. So, for example, if you really are interested in real estate, but you do not have that kind of money right now, to allow you to buy land and build and rent, then this is a good way of manifesting. Okay. um, there are three types of rates in Kenya, or really in general. We have income rates, where your money is usually just invested in rental properties. This means it is really low to moderate risk. It's not that risky, and then it gives you a steady source of income, or not income, steady return, for lack of a better word. Okay. And then we have D rates. So D rates is where your money is invested in development projects. When you talk of development projects, is a commercial property. For example, if a mall is coming up somewhere and you go by a rate, then your money is used in, building that mall. This is a little high risky. It does not have a steady return, But again, it's a good investment if you're looking for a long-term kind of return. Okay. We have R rates. So R rates is where they're looking for institutional investors. So this is not in Kenya yet. Our market is not that well developed, but yes, there are there in more developed countries. So again, because when you're talking of investments, you don't just need to look locally. If you're looking to invest in other countries, then a REIT can work for you. The reason I say there are no excuses, you see, a minimum investment for an a REIT, or sorry, for a rate is 500 bob. Okay, Lois, where do I get these rates? These are governed by NSE, okay, Nairobi Stocks Exchange. So you just need to go to your Google, get into the NSE website, go research on the rates, see which one suits you better, okay? Then again, like we said, for this to give you an actual decent return, is not something you get in today and get out tomorrow. So you need to hold your money for a period of like 3 to 5 years, you know? So yeah, these are basically some of the investments that you can take if you have low capital, but also depending on your risk appetite. Okay. So thank you for being a good audience. Feel free to ask any questions. I'm going to leave my contact in the description box, in case you need to reach out to me and ask questions or for any further guidance. But please feel free to ask any questions or leave a comment down below. Tell me what kind of risk appetite you have, or from this session, what kind of investment you think would be best suited for you. All right. Until next time, bye.